From JP Morgan's latest APAC Technology Specialist Sales Commentary, global semiconductor markets continue to be driven by accelerating AI infrastructure demand, with a clear divergence between AI-linked hardware beneficiaries and more cyclical legacy segments. According to the report, Korea memory capex expectations continue to rise, with Samsung Electronics potentially investing in a large-scale manufacturing hub targeting a 2035 ramp, signaling a structurally higher willingness to support AI-driven demand. At the same time, semiconductor equipment demand remains strong globally, led by ASML, Applied Materials, Lam Research, and KLA, with Asia beneficiaries including Tokyo Electron and Screen gaining attention as memory and deposition intensity increases. TSMC remains a key focal point, with market attention centered on A14 qualification timing and advanced node ramp visibility. In terms of structure, the report highlights clear pricing and demand divergence across components. Yezhou has reportedly notified clients of price increases across MLCC, aluminum, and tantalum capacitors, which together represent around half of revenues. This reflects tightening supply conditions driven by rising AI server content. VS is also seeing continued price increases in mature nodes, with 2H pricing expected to rise by 5 to 15%, extending from power, industrial, and automotive into broader end markets. Meanwhile, investors continue to focus on advanced packaging and HBM-related supply chain expansion, including beneficiaries such as Ibidin, Unimicron, and ASE-linked ecosystem players. On the equipment and advanced packaging side, Disco is seeing rising expectations ahead of upcoming earnings, driven by stronger survey data and upward revisions in HBM and packaging capacity plans. The report also highlights longer-term growth drivers including hybrid bonding, backside power delivery networks, and panel-level packaging, which are increasingly becoming structural demand vectors for semiconductor capital intensity. In parallel, TSMC ADR premium expansion reflects renewed investor positioning following strong semi-sector sentiment and ongoing AI infrastructure demand visibility. Overall, JP Morgan concludes that the semiconductor cycle is no longer purely cyclical, but increasingly structurally driven by AI infrastructure build-out. While pricing power is returning in selected segments such as MLCC and mature node foundry services, the key investment focus remains on AI-driven capex intensity, advanced packaging capacity expansion, and equipment suppliers positioned within the memory and logic upgrade cycle.